all appreciate the unprecedented changes and challenges that we have seen during this year. But also, it's been a year of remarkable responses from countries and companies and citizens. Let's join BlackRock's CEO and Chairman Larry Fink to look back at 2020 and ahead to 2021 through the lens of transformative trends in talent, technology, and sustainability. CNBC's Leslie Picker will moderate this fireside chat.
All right, I think we are officially live. I'm here with Larry Fink, the Chairman and CEO of BlackRock, with just a measly, what is it now, Larry, $8 trillion under management these days? You know, nothing to complain about.
It's something around there, yeah. It's about that.
So I don't usually like to start with a look back per se, but this has been such a transformative year in terms of work, how we work, where we work. If we could just level set for a minute, how is it going at BlackRock, and how do you think our work in 2020 will change things for the future in 2021?
Well, first, I want to just say to everybody who's listening in, I hope everybody's safe and taking care of themselves. This is a big impact in humanity, and how we think, how we live, and how we're going to go forward. Many lives have been lost, many lives have been disrupted, many families have been disrupted, and so I want to respond to the question in that context. The BlackRock has done quite well in this pandemic. We've worked very well together. When we began the firm, we developed our technology called Aladdin. We designed Aladdin to be organized around our offices. And now through the pandemic, we now have 16,700 offices because the majority of people are working remotely. And so we operationally worked very well. The technology has worked really well. But we also, the whole issue around the pandemic and where it is, we're not able to do what we always do in terms of embracing our young people, helping them move to different locations within the firm. So we're doing all those things. We're doing all those things to try to bring harmony and bring community. But going forward, because that's the thrust of your question, I do believe humanity has learned a great deal. I think we're going to really be able to adapt post-pandemic, post-COVID, when everybody's vaccinated. Humanity has learned to do things very differently, which is quite disruptive. We truncated 10 years of technology change in 10 months. And so all of us are adapting and moving forward. But I would say for BlackRock and for organizations that can function quite well working remotely through technology like this conference here today, we're able to adapt and grow and build. And that is one thing that is going to be very good. We as human beings have learned to do work from home. We have learned to do medicine at home. We have learned to be more educated at home. These are the technological changes that we've been thrusted. And this is why I'm so optimistic, because we've been able to adapt and grow. And so for BlackRock, and I've said this publicly in the past, I don't believe BlackRock will fully go back to office again. I believe it will be a blessing for most people that maybe a third of their work existence can be done from home. They don't have to commute. They could save money during those months where they're not commuting. They could spend more time. They save an hour or 2 hours a day from lack of commuting, and so they save time and money. And all of this is very powerful for how we live and how we grow. It's very powerful that we could be committing more time to our families, less time to commuting, but also you get to commit more time to working if that's what you choose to do too, instead of commuting. So we are going to be organizing our firm around this concept that maybe a third of the people will be out of the office on a rotating basis. So we will have probably 2/3 to 70% of our people in office. We're going to be working together to build harmony, build community, build culture. And through that process, I think we get even a better functioning firm.
how does that impact work-life balance? Because on one hand, we do get back the time that we've been commuting. But on the other hand, I'm sure a lot of people in the audience would agree, and I'm assuming you would agree, Larry, that by being completely virtual and by nature of the shutdown, people know that you're not socializing. They know you're not traveling. And so they can reach you at pretty much all hours of the night and day and early morning. Do you think that this is going to make society better from a work-life balance standpoint? Do you think that's something we need to think about, especially as we look ahead to what corporate culture looks like beyond the pandemic?
Great question, Leslie. I think during the pandemic, at least I'm guilty of allowing the breakdown of my demarcation of my personal and my professional. Most people would say I did not do a good job throughout my whole life of demarcating that, but I actually think I have done a good job. I'm not traveling. I'm not in Singapore today. I save time that way, and therefore we allow ourselves to have evening video calls at night. We're able to work this out. I do believe once we have a normalized function, though, I think people will move back towards that demarcation. And I think we'll set up more priorities and structure around that demarcation. The most important we all need to have is healthy minds. You're not going to have a healthy mind if all you're doing is working. Mm-hmm. And so we all, and this is getting back to even like how I think about stakeholder capitalism, about your employees. We need to build healthy minds with our employees. We need to making sure that our employees have that robust completeness in life, that they're able to have that personal identity and personal life, that they can grow that way. And I do believe they're better corporate citizens with that type of fullness in their life. And so, there is no question, I do believe we've had more intersection of our personal and professional during this COVID times. But I think as we start navigating towards more and more society being vaccinated, and more society are now resistant to COVID, and as we start bringing more people back to office and we more normalize our existence, through that process, we are going to have to set up limitations and demarcations so we can have that robust, healthy life.
And to that point, how do you hire in this environment? I mean, traditionally, especially in something like financial services, where it is so client driven, it is so people driven, where it's important to kind of look someone in the eye and shake their hand and make sure that they're the right candidate for these really, really important jobs. I'm amazed that people have been switching jobs in the pandemic. How do you hire people in this environment, and how do you really get them up to speed, especially as it relates to, getting to know their colleagues and BlackRock culture and all those important things that come with, working in a day-to-day basis?
Well, first of all, we try to do our best. Secondarily, what we do is we're still hiring hundreds and hundreds of people at BlackRock this year, and we actually have about 2.5% increase in our workforce this year. So we've been quite active in growing because the size of the firm is growing. So we have been one of that anomalies that continue to be building our workforce. Obviously, you have to do it through Zoom. You have to do it through some type of media. Sometimes you can meet the people in the office. Very important people, we're having them come in the office or getting tested and before they are allowed in the office. And then we could have some type of interconnectivity. But it's fair to say that we may not be as good as we were in recruiting in terms of the right people, but I think we've done a very good job. And I would say many times now when we recruit in campus, even before COVID, we did video conference calls with people as maybe in the first round. And I actually believe this is one of the real opportunities we all have, that we could actually have a more diverse group of employees by allowing ourselves to do more remote interviewing. We could interview at more universities, more places in the world. We could systematically build greater diversity instead of going to the 7 set or 10 or 15 schools. What we've done at BlackRock now, we're allowing much greater diversity in terms of applications, people from different places. And I think the outcome is a more diverse workforce. And so I could say we adapted and we're learning. And I think that dovetails with what we're trying to do related to stakeholder capitalism and what we're trying to do and build a more diverse workforce. And so we're taking this, this terrible pandemic and trying to adapt and build. And we're trying to build that workforce in a way that we probably would not have been able to do when it was all in person and physical. And so these are some of the blessings.
Yeah, that is definitely a glass half full aspect to it, because I know that financial services recruiting, you kind of go to the Ivy Leagues, and this is how it's historically operated. But I can see how technology would make it much easier to reach schools that are in more rural areas of the country and international students as well. And I can see that as being a big blessing for the financial services industry. And to that point, speaking about diversity, you recently made a pledge at BlackRock to have more representation at the firm. And in your stated goal, your pledge was by 2024, you wanted to double representation of senior leaders that were minorities, and overall representation by 30%, minorities in a racial sense. In the last 6 months since you've made that goal, how much progress have you made? How have you found the recruiting aspect of this? And what would you say to those leaders out there who say, my company's not diverse because I can't find the right candidates to fill those roles?
Well, that's garbage. I'm trying to be gracious on a call. I'm going to say something even more profound than garbage, but gosh.
It's not a pipeline issue. To those out there who have made that argument, it is not a pipeline issue.
We have had great success through this process of building a more diverse workforce. My calling out was just as great a calling out, not just to say, okay, we did not do enough as a firm. My calling out was to say to my workforce, we have to change. And we're going to change it. You're not going to change with us. We're not going to have you be part of this, process. And this year we've been quite successful in recruiting more people of color and more diversity. And we just weren't moving fast enough. We made a big push in gender years ago. We're still not doing enough. About 54% of our young recruits are women today. And now a big difference is we're going to some of our diverse workforce and some of our women saying, when they are young in careers, we're saying, would you like to move your career or have your career in portfolio management? Because in our business, that's the highest paying jobs. Mm-hmm. Where we were guilty of, we allowed everybody to choose their own career within our organization with their wishes. And now we're trying to inform them and educate them and train them and handhold them. And so what we're doing now, more than we ever did before, we're doing it much more proactively and trying to help engage people to reach for the stars in many other parts of our business. I mean, many people come in and say, I really want to go to the client service, or I want to go into our technology. I'm a great coder. I want to go that. Well, maybe a great coder could become a fantastic portfolio manager. Or I want to go into, some of our greatest success are some of the people who were in our corporate, in our FMA side, because the FMA side, where we're doing the consulting and advice work, you have to do these holistic reports on companies, and this is where we've been engaged related to central bank behaviors, that those people get a great, education. And so we have done a great job of moving those people around. So lastly, what I said in the mid part of the year related to diversity was basically a calling out to my firm more than anywhere else and saying we must change. And I would say this is early, but we are making great progress. We're doing more and more to help our young people in their careers to build their careers into different areas where they would not have felt comfortable otherwise. Our recruiting efforts are far better. We review those with my board of directors in October about the amount of diversity that we have. And keep in mind, when I talk about stakeholder capitalism, it is also about making sure that you are representative in the communities where you work. We have a big effort in Singapore. And so in Singapore, we must be Singaporean. We must be connected with the country and its people. what you're referring to is more what we need to be doing in the United States too. And to be local and to be connected in the community where we work, you have to look like the community you're in. So you have to be the mirror image of the community, and that's an important component. And when I think about, working with the communities where you work, I always say in Japan, we have to be Japanese. We have to be Mexican in Mexico. We have to be American in America. We have to be Chinese in China. We have to be Italian in Italian. But also we need to making sure that we have the proper gender mix, we're recruiting the right people. And when there are communities where there's a big ethnic group, we need to be part of that too.
So if I understand your goals correctly, you're expanding your recruitment to not just be economics majors from Harvard. You're saying that, hey, if you have a coding degree, why don't you come do portfolio management, try your hand at that it requires almost a sense of creativity in order to ensure that you get people who bring different perspectives,
sure,
different backgrounds. You can't just kind of go to the same cookie cutter mold of a person in order to fill those roles that maybe have, get that stereotype of working in financial services.
But let me tell you one little secret that's not a big secret. I actually have pushed the firm away from hiring most people who have business majors. In fact, if you look at our recruiting and the makeup of our recruits, the majority are not business majors or econ majors anymore. They may be in engineering, they may be an English major, they may be a philosophy major. When we talk about diversity of mind is probably the most important thing that you can do for a firm. Because if I hired the most diverse looking group of men and women, and they're all for one university, I mean, I may meet all the targets, but it is not diverse in mind. And that's probably going to lead to failure. And so diversity of mind is so critical. That means you want people who desired an English major in undergraduate, and that person's thinking differently than somebody says, I want to be an accounting major in undergraduate. People are framed differently. And so it is just as important, and this is so under-discussed about how do you making sure that you have a representative group of men and women that have diversity of mind. I do believe when firms fail, they fail because of groupthink. Groupthink is generally about a lack of diversity. Groupthink is also about having men and women who are generally thinking in the same fashion. And generally, those are people who have the same type of degrees and backgrounds. And so it's very critical when you think about diversity, you have to have that whole diversity of gender, of race and color, but of mind.
It also probably keeps things a little more interesting in the office as well, hearing different people's backstories and backgrounds and so forth. You mentioned stakeholder capitalism, I think a few times in our conversation. So I just want to circle back to that concept because when we think of stakeholder capitalism, you've really been at the forefront with your annual letters and talking about this and different policies that you've made at BlackRock most recently a pledge to back more resolutions on sustainability and social issues when it comes to a board vote or an investor vote, at annual meetings and so forth. So, this year, stakeholder capitalism has really come into focus, although it's been increasing in attention over the last few years. Do you think it's here to stay? Do you think it peaked in 2020 amid all of the pandemic and the calls for social justice? I mean, this was really a year where this is something that would make sense that it would be in focus. But as things kind of return to normal and everyone goes about their daily jobs, will we still care as much about stakeholder capitalism in the future? Or will we care about it more?
I think it's only going to accelerate. I think the existential risk of COVID, how it impacted our health, things like climate change is an existential risk of our existence. The social issues around diversity in organizational structure is becoming more and more important. And in this world that has most recently become a more deglobalized world, the demands in every society for every organization to be local, to prove that you're local. And so I would say the best companies are those companies who are focused on all their stakeholders. And you're seeing in each industry a broadening, a widening of PEs between the best companies and the weaker companies in industry. And that is, if you look at some of the great companies, it's not just the best technology, the best science, or the best footprint. It's also what they're doing with all their stakeholders. And I do believe, and this is going to be an important component, as I wrote in my 2020 letter, I asked more companies to report under SASB and TCFD. As more companies do that, the transparency we're going to have in every company, stakeholder capitalism is only going to become easier to measure, easier to account for. And through that process, Leslie, stakeholder capitalism will be a major lens, how we judge companies. And I do believe stakeholder capitalism over a long horizon will be the essence of what makes a great company.
Fascinating. Well, kind of sticking with the investor side of things, I wanted to turn and get your thoughts on some recent trends we've seen, because we do have a FinTech audience here. I'm sure they would love to hear, your thoughts on some of the recent dynamics in the markets. Namely, maybe we start with that of the retail investor. We've seen some interesting things where I think if you had asked me in March or April of this year whether I thought we would be seeing these moves like we're seeing in SPACs or like in Tesla or in IPOs or certain areas of the markets, I would have said, not this year. I mean, maybe another year, but not in 2020. Yet that's what's happened. And a lot of people are, I guess, pegging that on the retail investor and saying that they are the ones, their participation in the market is kind of fueling a lot of this, frenzy or froth that we're seeing out there. Their words, not mine. Do you agree with that? And do you think that it's good for the markets, or do you think that this is all going to end badly and it's going to be 99, 2000 all over again?
Well, that may be an outcome, but let's talk about the possibilities first. And first of all, I love the fact that more and more investors are focusing on investing in equities. I think one of the biggest problems I see globally, from Europe to Japan, where savings rates are massive, and all that savings is sitting in a bank account. And there's a big reason why U.S. equities have performed so much better than other parts of the world. But the two biggest areas where you see large retail involvement in equities is in the United States and China. And that's only growing. And I think one of the big issues for every society, if you're going to be building out a global capital markets, part of that global capital markets is to try to have more inclusion, more participation. And that's what we're witnessing as people have more time, because they're not commuting those 2 hours. They're actually spending more, and they're saving whatever the $300 to $600 what it costs to commute. They're putting it in the marketplace. And so what my hope is, as more and more people focus on investing in equities, that they then say, this is not just a speculative thing to do, this is a long-term thing to do. I would hope, despite what stock they're owning, they're going to be owning these companies for tens of years, and they're going to be using this as a mechanism to build huge pools of money for retirement. Now, that's not probably going to be happening with all, but let's be clear, those good outcomes of people seeing that they're making, they're able to build their nest egg through investing in equities, that's a fantastic positive thing. Now, related to some of the investment trends that we're witnessing and some of the IPOs, as you suggested, some of these IPOs are being priced at market caps and PEs that in the long run are unsustainable. Either those companies are going to have to grow into those earnings, and that's what marketplace always anticipates, and they price in a forward look. The question is the market pricing in too large of a forward growth rate for these companies? So I would say there are going to be many accidents with some of these companies, and some of these companies are going to transform into be leading companies of the world. So I'm not here to suggest which one. I'm not going to point out which ones I hate and which ones I like. But what we've seen time and time again, great companies that are trading at high PEs build their earnings, and their earnings catch up to those high PEs. I mean, Amazon is a great example of a company that continues to regrow and change itself. And so it does happen. And then there are many accidents where companies are priced to have such a tremendous, growth rate that they can never catch up to that growth rate, and those stocks fall. And I think that's going to be one of the big issues going forward. Are those
and
companies?
They can never make any mistakes. And they have to actually turn a profit one day. A lot of them are not even close.
Yeah, and I would be cautionary owning $50 to $100 billion companies that make no money, and there are many of them that are being priced right now. But they've caught the imagination of so many, and that is what I actually love about it. I believe that if we could get greater participation in people focusing on investing in equities. I've said in 2012 people should be 100% in equities. That's been a good outcome, and I still believe that despite where equities are, the central bank is saying, the global central banks are saying we're going to have low rates for longer. The ECB just announced another purchase program. That just, in my mind, builds a foundation for greater equity market returns over the next couple of years. I mean, it may lead to other problems going forward, but at least I could say over the next 6 to 12 months, we're in pretty good position for equity market growth. But there's going to be some accidents here, and
another
successes.
Another area that people are focused on as maybe a pocket of hype or momentum trading is that of Bitcoin. I know you've talked about it in the past. 3 years ago, you made some headlines for calling it the index of money laundering, but recently you've made some comments where you seem to be kind of warming up to the cryptocurrency world as something that could be one day a legitimate asset. What do you believe is the place for Bitcoin currently and in the future? And do you think that investors should be acquiring Bitcoin as a means for portfolio diversification?
Well, Bitcoin has caught the fascination of so many. That's one thing that's incredible. One of my investors, Rick Reeder, was on a show 2 weeks ago, and he talked about monetary policy. He spoke about he talked about a few different companies, and he talked about Bitcoin. The hits on our website was about 3,000 two subjects and 600,000 on Bitcoin. And so that just tells you the fascination that people have. Now, what does that fascination transform itself into a legitimate product over a long period of time? We'll see, but it certainly has brought this imagination. So let's talk about what Bitcoin is. Bitcoin is trying to create basically, it is a store of wealth unconnected to any government. And I think that has caught quite a bit of the fascination. Gold has played that role for years too. And so, is there room for another store of wealth that is unconnected to any one currency, unconnected to any real metal? And so we'll see how that all plays out, Leslie. I understand the fascination, but I also understand the fear why central banks are quite frightened of it, because, especially in the United States, because the United States is enjoying to be the global currency, the store of wealth. If the US dollar becomes not the store of global wealth, that's going to have a real impact on the dollar and the dollar valuation. That will have a real impact on how the US Treasury finances its debt. Now, I'm not calling for that at all, so I'm not making headlines with that statement, but we all have to analyze what that means. If the whole world said tomorrow that Bitcoin is the new store of wealth and the dollar is not, that is going to lead to very large consequences, and it's going to lead to a big conversation way beyond the time we have today.
That makes sense. Finally, because I know it's near time for us to wrap up, I just wanted to kind of turn back to the talent conversation, especially as we look ahead to this new administration. BlackRock has been in the news for being kind of like the new Goldman Sachs, which is known for having a lot of its executives go and and work in the administration and in economic and treasury related roles. And you've had a few people who are being tapped by this new administration to work on economic policy. I'm curious, what do you think it is about the culture of BlackRock that makes people want to go work in government? And what types of policies do you hope become front and center of the new administration when it takes office on January 20th?
First of all, I'm very proud of our culture of attracting very smart men and women. I think I'm also, BlackRock, because of who we are, we talk about public policy. We work on that. We spend a great deal of time talking about public policy related to retirement as an organization. And so public policy is a key. And so it's not a surprise that we have people who are going from BlackRock to government. And we're seeing that throughout in Europe too. And I'm very proud of the young men and women who are doing this. I think they're going to serve the U.S. government quite well. And I believe we have many more young people within the firm that one day they're going to try to say, it's time for me to be giving back and being part of the public good.
Excellent. Well, unfortunately, we're out of time. I feel like we could go on another half hour, but I know your time is valuable and really, really appreciate you taking it to share some insights about the workplace talent in this wild, wild year where everybody is so confused on what's going to happen next. I feel like I've learned something today. I hope everybody here has as well.
Thank you, everyone. Bye-bye now.
And thank you, Leslie and Larry, for that engaging discussion on expectations for 2021.